This chart is for William Hill, and you can have a good bet that this is a very interesting chart. What we have discussed on this eDVD a lot is trading trend lines, and that is because that is what our team does best. Now, we've had a break of this trend line, had a customary back test, and since then the market has broke down. We've showed you on our classroom lots of examples of telling when a trend is going to reverse, but quite often the first sign of a reversal is a important trend line getting breached. And with this, as soon as this trend line was breached, the up market was over and a new downtrend has started. And we expect William Hill, it may have a short-term bounce, but we will see lower prices in William Hill because a new trend has started. The uptrend is over and we are now in a downtrend on William Hill. So considering the horizontal bylines that we've put in, you may get a bounce around 330. But we never go against the trend. So the trend is down, so you would not want to buy shares. If you did buy shares, then what you would want to do is be very, very nimble and sell into any sort of rally you get very quickly. Now, what we can also discuss is retracements. We touched upon this in our ebooks, e-workbooks for the reversal patterns. But this market, if it was to retrace the initial, let's round it up. Let's say the rally started at £2 and ended at £5. The 50% retracement mark would be £3.50 per share. We've already gone through that. So the next retracement that becomes significant is the 66%, which is at £2.75. So that may well end up being a valid level of support. If that breaks, then you are looking at a 100% retracement. Because what you often find is when 66% is breached, you normally always get a return to where the rally originally started. There is economic reasons why William Hill has shown weakness. Now, William Hill has had some fundamental news which has caused its share price to drop. But also, the economy is improving, which means there's more people in work now. A lot of the people that had a lot of spare time and was using the services of William Hill are now in employment. So they haven't got as much spare time to hang around bookie shops. So as the economy improves, William Hill's profits should decrease. People are now earning money. They maybe don't need to spend as much time in bookies and things like that. So we did it actually say on Facebook on New Year's Eve, we anticipate William Hill's profits getting hit. And since then, the share price has declined. So you can predict price movements as well based on fundamental reasons and economics.